Hey everyone, welcome back to our daily Gamestop video in which we will discuss our technical analysis as well as our options chain breakdown. Kick back, relax, and enjoy. Starting with our technical analysis, we have a trend retest in which we were previously looking for, so that is out of the way. Very nice to see. Moving forward, we just want to see the 21 moving average on the 1-day chart hold. That's not bad. It is an exponential moving average, I should mention, in my teal blue line. Okay. If that doesn't, we have so many other layers of support here. Obviously, we have first the red line, which is our 200 exponential moving average, and then the navy blue, which is our 50 exponential moving average, as well as our breaker block, our previously invalidated bearish order block, now bullish breaker block, which is nice. And also the 1-day gap up from the warrant / earnings beat announcement, right? So a lot of support here for the stock between 25.15 as low as 23.60-ish, right? And now adding to that, when we look at the options chain in a moment, we'll see just a massive amount of calls that are in the money, typically, or not typically, specifically at $25. And of course, incrementally working our way up as we move forward into these later strike dates. However, short term, again, very nice support at this $25 level. With that out of the way, we have a few bearish order blocks here that I've marked out. And just how we previously invalidated this past one, so too will we look to break through these, right? Going through them, coming back, converting them into a breaker block, and expanding upwards past that. So on the 4-hour, we have that here, and also on the 1-hour, we have that here, right? And then just extending those two levels out. So now when we're trading, say on the 15-minute chart, we have that information for us in real time. Looking at the week ahead, that is our first goal as far as I'm concerned, right? Is these two levels currently resistance, but hopefully we're going to change those into support zones. On the 1-hour, we have that same thing with rejection around 720 and supports around 530-ish and 2530. There's so much support here that it's kind of crazy. On that note, we have on the 1-hour a reversal signal, right? This is our 1-hour bullish reversal signal, and something I use a ton in my day-to-day trading, where the 21 crosses over the 50 exponential with a key level breakout. Now here we have that level as our market structure shift, where we go from lower lows, now having invalidated that, to making a higher low, right? We want to confirm that now with a break of structure above this area, if we could get that, which would set us up for, invalidating these order blocks. Looking for this to hold, of course, just how we wanted a trend retest on the 1-day here, right? We had our reversal signal, we had our key level breakout, then we had our trend retest. So too could we have that happen here at any time, right? That could come in whenever. So just we want to have the price this week, and specifically tomorrow on Monday, hold that 26 level, right? If it goes down on low volume in the morning, that's okay, as long as when the market opens up, away we go, right? Typically, GameStop buyers are very eager Monday morning, and the rest of the week is subject to fade down unless there is continued strength with the broader market overall, which I do suspect the SPY was trending down for the majority of last week. That's not going to last forever, and the market has been so strong lately that it doesn't really scream long-term retracement. Maybe just slight pullback, and away we go even harder, right? That's kind of the vibe I'm getting there. However, we're going to take it day by day and see how this all plays out for us. On the other side of things, we can look at the Rory Kittinger technicals. Pulling up our Rory Kittinger charts, we recently discussed how we'd like to see the RSI continue its one-day uptrend. And lo and behold, we have another bounce off that trend, which is great. Looking for, a retest of 70 and, displacement upwards, at which point, things should get spicy. However, we're going to have to wait and see. This is just the first thing that we were looking for, and we get it, which is great. It still needs to hold, right? It could definitely turn back on us and invalidate. That's fine. Just, things I'm looking for in the week and weeks to come potentially is, sometimes you think a lot of this will happen faster than it does. Admittedly, I've been looking for the gap fill of 28 for 3 weeks now. And, I'm still waiting for it this week. Hopefully we get it, right? But this is, a step in the right direction as far as that goes. On the 1 day, our indicators may be different, but the underlying principles are somewhat the same, where we have the 20 crossing the 50, pairing that with the key level of the 100 simple moving average, right? I personally use exponentials of a different length, but again, the reversal signal of the shorter signals, pairing it with a price break of the longer signal line is the underlying technical that we're looking for, no matter what, length of the signal line or whether it's exponential or simple, right? So that's kind of what we're looking for here. We want to see that hold. We basically are getting our trend retest there as well. So that's fine if 25 can hold. Again, we have so many different areas of support at 25 that I don't think it will be a problem. Aside from that, we have on this chart, I'll look at it here. It's a little bit easier to tell. Our last bond offering, you can see that the price of GameStop relative to the broader market, the SPX, dipped below, by quite a bit here. And then we reclaimed it, right? And we're trading at a premium. But with that second bond offering, we've dipped below again, and we're just about to cross, right? So let's get first above the 100 moving average, but then get back to parity with the market and hopefully trade out at a premium too. Wouldn't that be a dream come true, right? So that's kind of what we're looking at here. We have the 1 hour PMO reversal, right? Has set for us, which is quite nice. We're going to be watching A, that hold, and B, if it can hold, let's see this 4 hour wrap back up again as well. Wouldn't that be nice? I believe the 1 day remains bullish, so that's fine. And, maybe just, converging a little bit here, but we can diverge again as well, which is great, and kind of extend this out a little bit, which we should be able to do, right? And that's why the further out you go on your time frame, the wider view you have, the more of a solidified signal you'll have, or concrete, right? You'll see in comparison, the 1 hour flips back and forth a whole bunch within that single 4 hour or 1 day signal, right? So kind of potentially some false signals within the whole within those minor pullbacks. I don't know if that makes sense, because if you look at the length in comparison, there's still a lot more room here to potentially go, and we'll get one of these, right, where the two signal lines come together, but then expand apartward once more. So that's kind of what we're looking for there. Yeah, not really too much on the 1 day. Of course, if the moving averages could cross each other, where the faster moving averages will cross the slower average. Typically we're going to call that a golden cross here, because it's usually the 21, the 50, and the 200. Here we're 20, 50, and 100. Let's call it the kitty cross, right? So that's kind of what we'll be looking for in the longer time frame as well. We have the ex-dividend date on the 3rd, record date I guess would be on the 2nd, right? Is that how that works? 1 day earlier. So anyways, make sure you have all your shares bought on the 2nd before the 3rd, right? And of course, those will be distributed to your account next Tuesday on the 7th. Super exciting times, and we can see how the price reacts to that. Quick recap in comparison to the ENVX, those were distributed in the money. Ours are out of the money, and I would not expect to see exercisation of those shares until GameStop's price surpasses the strike of 32, at which point I believe people will start exercising, and then the dilution hits, at which point the price may retrace. That's just how it is. Again, in my humble opinion, Ryan did this twice with the bond offerings, showed us how to do it, and now it's our turn. Everyone says, oh, Ryan's diluting us, killing the run. However, personally, I believe that the periods of increased liquidity are not necessarily up to us, and it's going to happen regardless to whether you're holding your cup out in the rain or not. The price is going to run. They're going to open up massive amounts of shorts at the top and crush it down. Whether or not us as individuals capitalize on this will be, up to you, right? Of course, I could be wrong on this, and maybe, if we do squeeze them, this is a one and done, and it really is endgame. However, I just don't necessarily think so. I don't think Ryan's a doofus, and I believe that we may want to follow his lead. Of course, that doesn't mean selling them now, exercising them now. It means waiting for a period of increased liquidity. Those 50 million share days, those 100 million share days, right? Where something's fishy is going on here. And that's them, rinsing orders, and it's going to have an adverse reaction in the days to come. I see it trading small caps all the time. However, I'd love to be wrong. But at the end of the day, it doesn't matter. Either way is right. Either this squeezes to oblivion and I was wrong, and that's fantastic, or we begin to incrementally take out some of that short side liquidity by participating in the moves that they're forced to make, right? They have to reshuffle the deck here. We can definitely capitalize on that reshuffling of it. Again, in my opinion, I don't want to be shilling. Just trying to follow my dad's example, okay? Looking at the options chain, that is pretty cool as well. Max Pain is moving up from 25.50 to 26. Let's see it at 27 this week. Wouldn't that be nice? Without getting too into it, on October 3rd, this week, over 30, good game, well played. See you next Tuesday. Wouldn't that be fun? But just like how last week we seen, or this week, the 26th, we seen these 30s get absolutely burned, everything else, these 28s, these 27.5s, these 27s, right? All just getting nuked out last week, which is really bad, right? So burning the chain is what they love to do, and we don't want that to happen this time. So, the 30s, not looking good. But then again, if we get over 30, that's why it is a GG, right? Under 30 is our likely pin because of how much open interest there is here. On that same note, so is 28, right? Over 28 is still really, really good. Likely pin, however, still remains under 28 as far as I'm concerned, and they would love this. Under 27, unlikely considering the open interest support here from 25 all the way to 27. This is what you would call a ramp. Even into 28 a little bit, but we'll have to wait and see. It's 'cause, there's a bit of a gap here, and specifically between these two. 25 acting as hard support here. I don't think they're getting it under that. And it is not just on this week. It's a multi-expiry support that you'll see the open interest quite high on 25 as well as 30s. But until we can clear 30, it acts as resistance, right? Before it's ever going to act as support for us. On the 10th, there's not too much happening here. Again, over 30, and it's just good game. At any point, once we clear 30, because of the future expiries with open interest at 30 as well, it's our new floor, right? As far as I'm concerned, just like we have 20 and now 25 being our floors. So pivot point really, I think, is going to be 27 Over 27, we can try slapping 30 and probably just get rejected down. Under 27, it's going to be as low as 24. But again, there's so much at 25 that I really think it's probably closer to 25 instead of 24. And then on, our monthly expiry, there's so much volume here, which one thinks is great. But let's remember that a lot of this volume is absolutely cooked at this point on the chain, as it was loaded ahead of time, has suffered now theta decay, right? So these 30s are just wow. But again, look at the 25s too, right? So that's fine. And incrementally, we see it at 26, 27, and 28 as well. So every time we can clear one of these levels, it's acting as a hard support. That's something that we can almost verify from previous weeks, right? As we are just slowly walking up bit by bit. So yeah, that's really all we have. We can take a look at the leaps really quickly as well. I would ignore the 120s. Degen's gonna degen, that's fine. As far as I'm concerned, the 100s fit that lotto brand as well. I would maybe put 1% of your profits in this from your past trade. If you didn't make any profits on your past trade, you don't play these. Again, call me a shill, that's fine. They're just such high risk plays. If you've not already made money, you should focus on doing that consistently first before you play these higher risk lottos. On that note, 20s, 25s, 30s, holy Toledos. And, that's why I don't think we're ever going to go below 25, right? And a big reason that if we can get above 30, I don't think we're going back there either. Extending outwards to 35, 40, and I guess 50 if you really wanted to, but that's, oh my gosh. It's not that much time, right? It's not a leap. It's really just a couple months. If you are actually looking at leaps, you got to go to 27, right? And even then, I would stick a little bit closer to the money, 35s if you will, but in the money is going to be better. These 25s, these 30s, much, much better. Keep it in the money, and you'll really just protect yourself long term if you can consistently do that. If you want to play right at the money, that's fine. Now you need to just do a little bit more risk management within that position. Again, if I can recommend a book, we should go through this, Options as a Strategic Investment. Maybe just we go through specific chapters that may be interesting. Specifically, like I know this week is pretty exciting and maybe next week, but it'll come to a point where it dies down and there's really nothing to talk about. There's no volume, there's no corporate catalyst. And then we can maybe dive a little bit more into that options education, and would be a good recap for myself as well. With that being said, exciting week. I'm really looking forward to it. The stars look aligned. If only we could get some form of catalyst to put us above 30, right? Now, a few things that come to mind is A, short side hedging in preparation for the warrant delivery, okay? B, as the price goes higher, and now this could be a cascading effect, the short players on the arbitrage from the bonds will also need to balance that hedge as we get higher, and potentially unwind it entirely as we approach, 37 and a half for 20 of 30. Wouldn't that be nice? So that would be a lot of buy pressure higher than we typically would have it as well. And, dare I say, maybe we get a 13G or a tweet or something. I don't expect it, but as far as the possible reasons that we could spring above 30 and hold it, that's what I'm looking at. Of course, we could just see general buy pressure from retail push us up as well. I would expect a lot of that this week. Of course, maybe I'm wrong about everything. We get crushed down and, well, it's just classic GameStop. Looking forward to it. Leave a like, drop a comment, subscribe to the channel. It truly helps. But most importantly, have an amazing day and week. I'm going to be here every single day. And I think I've been making a promise. I don't know if we've done it yet. If we get over 100 likes, 100 likes, I will start live streaming for you guys. We get live data and you have my take on things potentially, and we'll see how that goes as well. I'd love to expand the brand, right? So we've been doing really well, but I'm sure that there is a way we could do better. Take care, and I'll see you soon.